Richard Calhoun, Creekside Realty, here to discuss the Silicon Valley real estate market. And we're talking about week 39. We're going to be talking about Silicon Valley, single family homes, four counties: San Mateo County, Santa Clara County, Alameda County, and Contra Costa. Most of it's based on 5 weeks of data, and the reference years are 2014 through 2021. Here is looking at DUI in the blue, red off the left-hand axis. That's how long it takes to sell all existing inventory at the existing rate of sales if no new listings came on the marketplace. So the lower the number, the faster the marketplace, the higher the DUI, the slower the marketplace is. Basically, since April the 1st, we slowed down till through July the 4th, then we improved, and now we've been through Labor Day, and now we've been slowing down again. The other data on here is the number of offers. So you can see we hit a peak number of offers accepted back in April of 2021. April of 2022 was pretty robust as well, but not as high as it was in 21. And then all of a sudden we lost the buyers and the market came down. The third line is the active inventory. You can see the inventory is growing. We now have the most inventory we've had in 3 years. You have to go back to 2019 to get the same level of inventory. And you'll see in a slide, at least for Santa Clara County single family homes by themselves, we actually still have a shortage of inventory defined as what the median is from those years 2014 through 2021. Here's the same data slide going back to 14. Now we're moving on to DUI and comparing it to some sort of history. We're looking at the 10 percentile of that 14 through 21 period of time. The red line is the fastest marketplace. It's the 10 percentile. The blue line was the slowest, the 90 percentile, and the gray line is the median of where you'd expect days of unsold inventory to be. And actually, for the last couple of weeks, we've been basically right at the median level of DUI, which I think would have surprised a lot of people. I think most people think the market's is very slow just because we were so fast. But in the last 2 weeks, it's gone up now, and we're up at one of the slowest times we've been during that whole time period of 2014 through 2021. And you can see again quickly, basically from April 1st through July 4th, the market was slowing down. The DUI was increasing pretty rapidly. Then from July 4th through Labor Day, it was improving, and now it's reversing direction and slowing down again. Here's the same data, just going back to 2014. Now we're looking at Delta DUI. Delta DUI is where you take the DUI for the four counties and you subtract it from the median. If you were right on the zero axis, you'd be having a completely normal year as defined as the median of 2014 through 2021. You can see you were having a higher DUI early, then you had a much higher DUI during shelter in place. Right after shelter in place, we came down and we were 20 days below where you'd expect to be. And 20 days below a DUI median of about 40, which is about where it's been, is pretty significantly faster. It's half the speed or twice the speed. Then you can see we slowed back down, not as slow as we were during the pandemic. Then we've improved, and right now we're slowing back down again. Here's DUI going back to 2014. Here's looking at DUI for each of the counties. So now we're seeing a breakdown. You're going to see Santa Clara County in the blue. You're going to see Alameda County in the orange. You're going to see Contra Costa County in the gray and San Mateo County in the yellow. The DUI, and this is for the back through 19. Here's the same data set going back through 2014. Now we're looking at the number of offers. You can see the huge hit the number of offers accepted took during the announcement of shelter in place on March 17th. It started to improve on May 1st once we were able to show properties again. And then we went into this accelerated or superheated period where we were selling more offers than you would expect based on the 2014 through 2021 timeframe. Now, conversely, we're now down here below the 10 percentile, so we're selling less homes than you'd expect. That balances out eventually, I guess, but you can see then we improved and we were right there at the 10 percentile level, which is, respectable, but still pretty slow marketplace. And now we're going the other way. We're basically selling about 2,750 homes every 5 weeks. We had been been selling 4,000. It's dramatically less number of houses selling than we've been used to. Here's the same data slide going back to 2014. Now we're looking at the percentage of offers. So this is what percent of the total marketplace is each county. And you can see San Mateo County is the lowest. It's down around 12% of the total marketplace. The other three counties are pretty close together. Contra Costa County tends to be a little bit on the bigger side. It's all, the gray line is sort of on the top most of the time. And Santa Clara County and Alameda County trade off back and forth. Here's the same information going back to 14. Now we're looking at the delta of DUI. So this is just what the raw count is. So if you were at the median level, you'd be right at 0. See, we were having a pretty respectable year through 2019, early 20. We were basically selling, 150 homes, 200 or 300 homes less than we did for the median. Shelter in place was announced. We went all the way down to about 2,300 fewer homes. We were able to show property. We came by July the 1st, we were back up to normal. And then after July 1st, we just kept on going and we were up about 700 homes above the normal level. The level of magnitude slowed down a little bit at the end of 2021, was pretty respectable in 2022, but then basically with the first week of April, it started to slow way down and we got down here and we were having a shortage of about 1,200 homes. And again, a shortage of 1,200 homes on about 4,000 is pretty significant. It's about a third of your marketplace. Here's the same information going back to 14. Here's looking at the coming in, the raw count, the number of offers. So you can see San Mateo County has the fewest number. And as you'd expect, the other three counties are very close together because we've already saw the percentages were the same. So the raw count should be the same. Here's going back to 2014. Here's the percentage of active listings. And you right off the bat, you should notice there's only 3 lines instead of 4. That's because I don't have data for Contra Costa County. So Contra Costa County was equal to Alameda County by myself, and the Contra Costa gray line is overwriting the orange line. Here you can see that there's separation because now I have the data, and you can see that they're fairly close together, at least compared to any other county. And I needed some benchmark of estimating it since I don't have the data, and that's key for understanding what's going on. Santa Clara County is in the blue, and you can see it's gone through some gyrations where, earlier this year, there was a big shortage of homes, single family homes in Santa Clara County, and we're getting back to that shortage again. And we'll see that a little bit. You could sort of see that the normal is Santa Clara County makes up about 30% of the marketplace. In fact, rough numbers, Contra Costa County, Alameda County, and Santa Clara County all should be roughly about 30%, with San Mateo County making up the extra 10%. Here's the same information going back to 2014. Now we're looking at the magnitude of overbidding. This is how much buyers are paying over asking price in order to get the property. And this pattern we'll see in the next several slides. The outer 2 lines are blue. They're 2.5 percentile from the max and the min. This one down here is the 2.5 percentile. This is 97.5 percentile. The reason I did that was to get rid of the 1 and 2 data points that are clearly in error. So it's essentially, it's an automated way of doing the maximum and minimum without having to hand sorting and getting rid of bad data points where someone puts in a property selling at $510 million instead of $510,000. So that's why they're 97 and 2.5%. Then the next lines in gray in color are the 10 percentile down here and the 90 percentile. 80% of the homes were sell between the grays lines. Then you have the green lines at 25 percentile and 75 percentile. So 50% of the homes sell between this overbid range. And then you have the median and the average. So you can see they're pretty close together. The median is more reflective, except for when you're at 100% like you were here in 2019, then you need to look at the average to get some idea of what's going on. Here's the same data going back to 14. Now we're looking at the delta magnitude of overbidding, taking the overbidding that you're happening on, say, April the 1st, subtracting the median overbidding and finding out that the current overbidding is 11% higher than you would expect for April the 1st. That's basically how you can read it. And that's to try to get rid of some of the cyclic nature of the real estate marketplace. So you can see we were basically on a straight up slope from basically shortly after the shelter in place, because we could show properties on May 1st. Those May 1st are going to start closing on June 1st. And here's July 1st. So sometime before July 1st, you were turning around and improving, and you just kept on improving the whole time. until we got to April 1st of 2022. And then we rolled over and we came right back down, and we're now below the median overbidding. So we're overbidding is less than you'd expect it to be. Here's the delta going back to 14, same slide. Here's the magnitude of overbidding. So this is just the raw count. So now you can see that in Alameda County, for example, you were up here at around 119%. Sellers were getting 19% more than their asking price in Alameda County just at the peak. In Santa Clara County, they were getting like 16.25% above. San Mateo County was somewhere around 14%, and Contra Costa County was down only at about 8.33%. Same data going back to 2014. This is looking at the delta of the overbidding. This is where you take the overbid amount for any given county, subtract the median for all 4 counties, and you can see who's got the biggest overbid. Alameda County had the biggest overbidding. Santa Clara County was next. Santa Mateo County was basically right at 0, so it was getting basically the median, and Contra Costa was lagging behind at 6% below the median for that particular date. Here's the same data going back to 2014. Now we're looking at the magnitude of overbidding. What is the degree of overbidding? And this actually is a repeat of a slide, so I'm going to delete it because you're up here at 19% and 16%, so I've already done this. Going back to 14. Now, this is a new graph that I think is pretty interesting. You have your hottest week ever, which is April 12th, 2022. And if you guys remember, I've been saying the hottest week was March 26th, 2022. That was based on single-family homes, condos, and townhouses in San Mateo County and Santa Clara County. We're now looking at single-family homes only, but we're looking at them in Santa Clara County, San Mateo County, Alameda County, and Contra Costa County. So we've added 2 additional counties, and we've dropped away condos and townhouses. That delayed us by basically 3 weeks. So now you're basically looking at a little over 2 weeks, April 12th being the best week ever. The worst week ever is still back here on April the 30th of 2021. And so then the purple line is the current line. And then what we're going to do, and then we're going to bring in a historical data. So we're bringing in a year ago, and whatever date's getting flashed on the screen is going to be boxed off in green, and then you'll see that it's minus 1 year. With that, we'll go through and see how it steps through. Minus 11 months, so 11 months ago, 10 months ago, 9 months ago, 8 months ago, 7 months ago, 6 months ago, and you can see that it's been basically marching up. Now it's marching down. 4 months ago, 3, and you notice solid dotted dashed lines now instead of dotted lines. 11 weeks, 20 weeks, coming down. Now we're going to go to solid lines, and we're still marching down. Now I think we're going to go back in neutral because you basically aren't changing anything. You're bouncing right there at the bottom. And how I get plus 1 week, this is really not October 4th data. This is midnight last night data. So this is September 30th data at midnight. And I basically go back 35 days. So I alter the last data point. There's not going to be much change from October the 4th because there's going to be no recordings on Saturday and Sunday. Monday, as there will be some recordings, but there's fewer recordings on Monday than any other day of the week. And Tuesday is also a fairly light day. So that's basically only a day and a half out of 25 days, recordable days. So that's less than 10% of the market coming in, about 5% of the market coming in, and there's not going to be any real change. So it's basically sort of a hedge factor, but it's really data through September 30th. Here's the frequency of overbidding. So here in the blue line is the number of sellers getting more than their asking price. So you can see we were up here where 90% of the sellers were getting more than their asking price. The orange line is the sellers that are getting less than their asking price, and the gray line is the sellers that are exactly getting their asking price. Here's the same data set going back to 2014. Now we're looking at the delta frequency of overbidding. That's where you take the frequency and minus the median. And so the median for basically 2022 was a lot lower, so the frequency was way higher. Basically, when you have 30% of the more sellers getting over their asking price, that's how you're able to get up to that, 90% of the sellers getting more than their asking price. Then you can see we came down, we went through the 0, and right now we're getting sellers are getting less than their asking price. Santa Clara County has improved fairly significantly the last couple of weeks. You can see it's coming back up. I expect it's going to level off with the UI going back up, but you got to remember there's a 5-week lag time on the sale price. Same data set going back to 2014. Here's the frequency of overbidding for the 4 different counties. So you can see the difference. San Mateo County was doing sort of the worst over here, which is a little bit unusual. You can see back over before shelter in place, it was actually doing the best, and that's historically where it is. With shelter in place and going forward, it actually became worse, and it's still basically one of the bottom ones right there with Contra Costa County. Here's going back to 2014. Here's list price, which isn't all that useful of information. I plotted it. I was hoping to get a jump on what sold price was going to be doing, but once I plotted it out and thought about it, what really changes more than the list price is the sale price to list price ratio, that overbidding amount. But here's the same data set going back to 2014. And now what everybody likes is sold price. And again, it's the same concept that we had earlier, the 97 percentile on the top and the 2.5 percentile on the bottom. So basically this is your max and min and max price. So it's hard to get a house. And yes, you can get a house for more than $4.5 million. But in the 4 counties, that the $4.5 million is sort of the upper end of where the threshold where it gets into the stratosphere. There's only 2.5% of the homes that sell for more than $4.5 million, and only 2.5% of the homes sell for less than $500,000. The gray lines are the 10 percentile and the 90 percentile. So 80% of the homes sell between these 2 price points, which are somewhere around 675. I don't think it's quite 700, but let's call it 700,000 and 2.8 million. So a $2 million range, basically, where 80% of the homes sell and 50% of the homes sell between the green lines. So now you're somewhere between 900,000 and 1.9. So half the homes sell in $1 million range between 900,000 and 1.9 million. And here is your median and then your average. And you can see the average is quite a bit higher than the median. And median is what most people quote. And you can see the median went up and came down, and you can see it for all of them. You can draw a horizontal line and you're coming back into somewhere around April of 2021 pricing for current pricing. Here's the same information going back to 2014. Now we're looking down at the breakdown of the 4 different counties, single family homes on the left, condos and townhouses on the right. You can look at whatever you want. DUI overall is at 57. You can see Santa Clara County is leading the way at only 50. Actually, Alameda County is beating out Santa Clara, 48.5, 52, 68, and 68. Overbidding is down here. Got it coming down here, frequency. So 43% of the sellers are getting more than their asking price. In Alameda County, it's almost 50% of the sellers are getting more than their asking price. So it's varying from basically 38% to 49%. What I find interesting is at the bottom here, the appreciation. This 10% appreciation is pretty good. And since the entire calendar year of 2020. So basically 2 years ago, to have 20% appreciation in 2 years is pretty good. Note, though, San Mateo County only had 8%, but we'll see in a matter of a minute or two from now that these numbers were much higher. They were around 50%. Here's the number of offers accepted. 729, 10th worst out of 10 years. Actually, it's also the 13th worst out of the 13 years up here, and it's significantly lower. 1,013 is the lowest number I'm picking up really quickly, and this is basically 30% below your lowest number of offers. That's how much the market has slowed down. We went from the best year back, basically second best year at the beginning of this year, and now we're basically at the worst year we've seen. Now we're going to go to blended data, which is Santa Clara County and San Mateo County, single family homes and condos, 1 in 5 weeks. This is 5-week data, single family homes only. It's showing you the heat map of the different areas, the days of unsold inventory. You can see Santa Clara County is actually in a pretty strong seller's marketplace, with a lot of the valley being in less than 40 days of unsold inventory, which is the threshold of becoming a seller's marketplace. Here's it over time. You can see back in May, even though that's already past the peak, we were pretty red hot sellers marketplace. You can see that it cooling. You can see the blues come in and the pinks get paler and then whites overcome. But then you can see it turned around and got redder, and now it's starting to get paler again. Here's the magnitude of overbidding. This is how much above asking price buyers are paying. The only area where it's off significantly is the expense varies in San Mateo County. The reason the map has almost no color on there is most of the areas are between 99 and 101.5%. The two exceptions are the expense varies in San Mateo County and then the very north area in San Mateo County. And it's so pale you can't really see it. But if you look here, you're at 101.7. Anything above 101.5 has some color. And I can almost see the upper right-hand corner of that square, but it's pretty hard to see. Now we move over to the frequency of overbidding. This takes a little bit longer. Foster City, Redwood Shores is on fire. Very small marketplace, so it changes quite a bit, but 69% of the sellers are getting more than their asking price, basically 7 out of 10 sellers. And there's probably less than 10 sellers, so 7 of the 10 got more than their asking price. The slowest area is the coast in San Mateo County, and that's 1 out of 4 sellers are getting more than their asking price. Here's the sold price. It has nothing to do with the speed of the marketplace. Redwood City is assigned white. If you're above the median price, you're red in color. If you're below the median price of Redwood City, you're blue in color. Here's the appreciation I was talking about earlier. Here's where the record high for 2022 was, and you can see the vast majority of these are between 40% and 60% appreciation over 2020. Very dramatic appreciation. You're now down somewhere mostly in the teens and low 20 percentiles. Yes, South County is at 40%, but it's fluctuating. It's coming up right now because just go back a few weeks, it was down to 20% after being up for 50%. So there's some fluctuation going on down there. And that's one of the things you have to remember. And one of the reasons I plot the data so many different ways is trying to understand what the difference between data fluctuation is, statistical fluctuation, and actually changes in the marketplace. Here's your market conditions of the different area. DUI, the redder the color, the hotter the marketplace. Same with the magnitude of overbidding. Need sale price, so it lags behind by about 5 weeks. The magnitude is a little more responsive than frequency. A great example is when the market started to slow down, buyers were willing to still pay over asking price, but instead of paying 120% over asking price, they were paying 105% over asking price. So the magnitude dropped dramatically. The frequency did not drop that much. In fact, these numbers, are 40 percentile for the most part. We were only up in the low 90, high 80s, low 90s. You haven't dropped that much. And then on pricing has nothing to do with the speed of the market. Simply Redwood City at $2 million here is the median price. That's assigned to be no color. If you're above it at 2.15, you start getting some pink. If you're below it, you start getting some blue. Condos, the median is the high price is set for white, and everything below that is set for a darker shade of blue, depending on the area. Here's your shortage of Santa Clara County single-family homes. We only have 73% of what you'd expect to have. From that point of view, it should be a seller's marketplace, but the buyers have gone away too. The DUI is the ratio between the two, and it's balanced at 43. San Mateo County has 10% more inventory than they expect. Santa Clara County condos right at where you expect. And Bay Cities, I've talked about this almost every week. There's been a huge influx of high density, lower priced homes, and that increased the magnitude of what's available for sale as well as lowering the price. The magnitude of overbidding right at 100% in all the different areas. The frequency of overbidding right around 40% for all the areas. Here's the appreciation. We're down to 20%. We were up to 44%. A year ago, we were at 24%. So we're lower than we were a year ago. In San Mateo County, we're at 6%. And that's 6% for 2 years, which is starting to be pretty marginal, but it becomes really almost depressing when you realize you were up 24% after 1 year and up 38% after 2 years, and now you're only up 6%. Condos tend to be more stable, but this trend's the same, 19%, 34%, down to 11%. The Redwood City areas is actually a negative number. The median sale price right now in Redwood City condos is lower by 11% over the 2020 price for the entire calendar year. Now we're looking at single family homes in Santa Clara County only. We're looking at what I call September data. This isn't technically available until October the 6th because it's based on a 35-day moving average starting on the 1st of September. What I'm doing though is I'm basically going back for this month from from September 30th back 35 days. So I'm actually using 5 days in August, which would tend to be more robust than 5 days in October. But the number of sales is the lowest on here at 816. There isn't anything close. I think this 1,050, actually 925 is the closest. So 10% more homes than 2019, but we're down. DUI at 41 is somewhat respectable, and that's because the inventory is pretty low number. You're not seeing a huge number of listings coming on the marketplace, and in large part, that's because sellers that don't have to sell now, I think, are holding off. The magnitude of overbidding is a respectable 100%, 0.3, so just over their asking price, with 42% of the sellers getting more than their asking price. Median price is up 50,000 from last year. And with that, this is the slide you get at the beginning before I log on. Here is any questions, and I'm going to go over the root URLs as you think about your questions. The green gets you to my YouTube archive. If you add in 2022, you get to the Saturday night at 9 o'clock Saturday morning, you get to the live presentation. If you add in the word handout, the year, month, date code, you get to the handout, which will be posted later on Saturday. It was not posted like I tried to 15 minutes before. And then if you want a specific episode, you just put in the root URL and put in the year, month, date code without the letter H. Not seeing any questions. Everybody have a nice week. Take care. See you next week.